Hey everyone, today we're diving into a really wild crypto story. We're going to try and crack the code on a single token that just seemed to defy gravity, absolutely exploding in price, while the rest of the market was, well, pretty much flat. So let's get right into it.
So get a load of this number, 3,500%. That is the insane gain that the RaveDAO token, or RAVE, saw from its recent lows. I mean, that's the kind of move that creates legends and, of course, liquidations in equal measure. But the real question is, how? Was this some visionary project that was finally getting the attention it deserved, or was there something else going on here?
And just to put this into perspective, to really understand how much of an outlier this was, look at this. On a day that Rave surged a mind-boggling 185%, the entire crypto market went up by just about 1.5%. So yeah, this was not a rising tide lifting all boats. This was a lone rocket ship taking off from a totally calm sea. So what was the fuel?
Okay, so let's start our investigation with the surge itself. I mean, this is the explosion that got everyone talking. And it's really the catalyst for everything we're about to unpack. Naturally, the media definitely took notice. Beyo Crypto called it one of the most explosive movers of the month. And when you start seeing headlines like this pop up, you know that literally thousands of traders are just glued to their screens, all asking themselves the same thing. Do I jump in on this, or is it already way too late? All right, so to understand all that hype, we first have to get the story that the project was telling the world. This is what you'd call the bull case, right? It's the official narrative that gives a token its perceived value in the first place.
So, according to their own white paper, RaveDAO isn't just another token, it's a whole ecosystem. The vision is to merge live entertainment, we're talking huge music festivals, with Web3 technology. Think of it like a decentralized Tomorrowland, where the community itself helps build and govern the entire experience. It's a really ambitious idea, and you gotta admit, it's a very compelling one.
And look, this wasn't just an idea on paper. The project's timeline shows real, actual momentum. It started out pretty small, just a 200-person after-party in Dubai. But by 2024, they were already hosting events with big-name partners like Binance, OKX, and Polygon. Then they get a Coinbase listing, which, is a massive stamp of legitimacy. And looking ahead, they've apparently signed MOUs with giants like Tomorrowland and Warner Music Group. Now that is the kind of roadmap that gets investors genuinely hyped up.
But what does the token actually do? Well, its promised utility is actually pretty deep. It's supposed to be your ticket to events, both live and digital. It's your voting power in the organization. It's your key to earning rewards through staking. They even have a philanthropic angle with this Rave for Light initiative. So in short, the token is designed to be the absolute lifeblood of this new entertainment universe. Okay, now, let's switch hats for a second. We've seen the fundamentals, we've heard the story, but how did all this look to a trader who's just staring at a price chart? This is where we enter the world of technical analysis, where patterns and price levels are pretty much everything.
From a trader's point of view, this rally didn't look like chaos at all. It looked more like an ordered staircase. Analysts were using a tool called Fibonacci extensions. Now, you don't need to be a math whiz here. Just picture a series of price steps. First, the price found its floor, its support, at around $5.45. Then it bounced and started aiming for the next step up, with a target somewhere around $9. To a trader, this looks clean, predictable, almost textbook. And that view gets even stronger when you see how the price just systematically cleared all these key levels. It broke its old all-time high of $1.23 and turned that level into support. It blew right past a key Fibonacci level at $1.86, and it ultimately hit a new all-time high of $9.81. I mean, for a technical trader, this was just beautiful. A perfectly executed move.
But, and this is a big but, this is where our story takes a very sharp turn. Because while traders were admiring this beautiful chart, on-chain analysts, the detectives of the crypto world, were seeing something totally different. They were seeing data that suggested this perfect rally might have been, well, perfectly engineered.
And this number right here is our first major clue, 18.58 million. That is how many Rave tokens were deposited onto the BitGet exchange by wallets reportedly linked to the project's own developers. And the timing? It happened just about 10 hours before that massive pump began. A very curious coincidence, wouldn't you say?
So what happens when a price starts rocketing up like that? Well, all the traders who bet against it, the short sellers, they get absolutely wiped out. In this rally, over $31 million in short positions were liquidated. And you have to remember, every single one of those liquidations is a forced buy, which just pushes the price even higher and adds jet fuel to the fire.
The token supply structure is also a really critical piece of this puzzle. See, only a quarter of all the Rave tokens were actually out there, circulating in the market. The other 75% locked up or held by the team. Now, with such a small available supply, it becomes way easier for a small group with a ton of capital to just push the price wherever they want it to go.
And this is where you see this really stark contrast. The claim, the story, is a decentralized, community-driven project. But the on-chain data? It shows two team-controlled wallets holding a combined position that, at the peak, was worth over $8 billion. That is an unbelievable concentration of power and wealth.
So, this whole RaveDAO case study actually gives us the perfect opportunity to zoom out for a second and understand a classic market pattern that traders absolutely fear. Let's take a look at the anatomy of a market trap.
So, what exactly is a bull trap? You hear the term thrown around all the time, but it has a really specific meaning. And honestly, it's critical for anyone who's in these markets to understand what it is. A bull trap is essentially a fake-out. The price breaks through a key ceiling, a resistance level, and everyone who's been waiting for that breakout piles in. They start buying, expecting the price to keep soaring. But it's all a deception. The price quickly reverses, it turns around and starts falling. And all of those hopeful buyers? They're now trapped in losing trades. And you know, for every bull trap, there's an equal and opposite bear trap. While a bull trap tricks buyers into thinking a rally is just getting started, a bear trap does the opposite. It fakes a breakdown, tricking sellers into thinking a crash is coming, right before the price rips back up. Both of these are designed to exploit our fear of missing out, or FOMO.
So we've seen the official story, we've seen it from a trader's point of view, and we have definitely seen the skeptic's data. So now let's try to put all the pieces together and figure out the difference between the hype and the reality here.
So how can you actually protect yourself? Well, here are 4 key red flags to always be watching for. First, breakouts that happen on weak volume are often super suspicious. Second, and this is very relevant to our Rave story, is supply concentration. Is most of the supply held by just a few insiders? Third, watch out for those insider moves, like huge deposits to an exchange right before a pump. And finally, an extreme volume to market cap ratio. If a token is trading more than its entire value in a single day, that is a massive warning sign.
And this all brings us to the core takeaway from this whole thing. The Rave story is so fascinating because it is not black and white. You have a project with a really compelling vision and legitimate high-profile partners like Warner Music. But at the exact same time, you have all this on-chain data that just screams potential manipulation. Both of these things can be true at once, and that's exactly what makes navigating the crypto space so complex.
Which leaves us with this final question to really think about. In a market that is so driven by hype and by anonymity, how do you decide which signals you can truly trust? The compelling story, the clean-looking chart, or the cold, hard on-chain data? The answer isn't simple, but learning to ask that question in the first place, that's the most important step. Thanks for watching.